This is a follow-up video to one I did just a few weeks ago that talked about the announcement that conventional interest rate pricing of risk is about to change, and it changes on May 1st. And this is really important, particularly for buyers and actually refinances as well, as it's changing all across the board. But what we're talking about is how conventional Fannie and Freddie will assess risk for different features of the loan, which means the more risk, the more the consumer will pay for that rate. And if they don't want to pay that extra cost, they take a higher rate to offset it. So this has major impacts. And I just want to go over it really quick because I got a chart here straight from Freddie Mac to give you a sense of what these changes will look like. So here's an example of how this is going to impact. Now, this is just one of the impacts for loan level price adjustments or risk. But one of the big ones is, what is your credit score compared to your down payment? Now, these adjustments are in whole. So this is not how much the change was, it's what the final effect will be. So for example, if you have a 740 to 759 credit score and you're putting 15% down, you're going to pay 1% of the loan amount as a fee for that rate. If you don't want to pay that fee, you take a higher rate to offset that cost in part or in whole. So that's what we're talking about. So in red, you can see where it's going to get more expensive. And again, this is not in total. In some cases, it is in total, but this is the final impact. Green shows you areas where it actually gets better. So what we're seeing is we're actually taking what I would say the heart of a consumer that's a ideal conventional borrower, which is that 720 to 759 credit score, and putting 5 to 20% down. You're going to see that for all those borrowers, it's actually going to get more expensive, apples to apples, after this change. And, I don't know if that's being used to fund these improvements or if it's just a way for the market to make more money through Fannie and Freddie. I'm not sure, but that's the net effect, is it's going to get more expensive for that core borrower. So in addition to credit score, though, there's other factors, and some are good, some are bad, that we want to take a look at. So here's one. These are special attributes that would be applied to purchase mortgages. You can see again here. And one of the ones I want to point out again is debt to income ratio. This is not something that currently impacts an interest rate at all. Whether you have a 10% debt ratio or a 50% debt ratio, if you qualify for the loan, doesn't impact your rate. We will now see that change. And this one does make sense. Obviously, a borrower at 50% debt ratio is a higher risk than 40. And so they're going to start recognizing that now. And you can see that, again, after this goes into effect, a borrower with a debt ratio over 40%, so 40.01% over, you're going to see a 0.375% hit to the cost of that rate. And if you don't want to pay it, you take a higher rate. The other thing I want to point out here, because this is actually kind of a positive thing, is the number of units. So one of the risk factors is, if you're looking at buying a home or if you're refinancing a home, a single family home compared to a 2-unit or a 4-unit, everything else in the file remaining the same, has a higher cost for that rate. We're going to see that cost improve. So again, it's not saying it's improving by 0.625. That's the hit. So a duplex 2 to 4 unit compared to a non-duplex is going to have a fee of 0.625%, but that is lower than what it currently is. So that's good news there. And I'll just quickly go through the screen here just so you can see them. You can pause the video. Here's the base grid for cash out refi. So if you're going to do a non-cash out refi, different grids for your credit score and loan to value is different than the purchases you saw above. So you can again freeze this video, take a look at it. If you want to see how the changes are for no cash out refi, special mortgages, you can see these grids here as well. So major changes coming that again will impact cash out refis, some changes, mostly good changes for cash out refi. So that's a nice thing. And let's see here, last one here, cash out refi, some additional special features. So again, you don't have to memorize this, but what I just wanted to show is there are changes coming that is going to impact how interest rates are assessed. So that might make a difference in your decision whether or not you're looking to buy now or to buy later. If you have questions, let me know. I hope this video was helpful. And until next time, have a great day.